Today, folks, I'm going to reveal to you the most prudent Canadian real estate hacks you probably never heard of, whether it's how realtors screw you on your deposits and how to protect yourself. We're going to talk about private mortgages, how to avoid utilizing bank debt to literally avoid default altogether. And we're also going to be revealing 3 Canadian REITs. These juicy real estate investment trusts with as little as $20 invested can start generating you that awesome, juicy passive income literally tomorrow off a crazy diversified billion-dollar real estate portfolio. Now, if that's a conversation you'd appreciate, hit that like button, because firstly, we need to talk about the real estate market where I live here in Toronto, and things are getting scary. And I mean, we're talking like March 2020 pandemic-like scary. We're seeing transaction volume dry up by as much as 48% year over year, and the average selling price is now starting to adjust. I've been analyzing and paying attention to the rental market, which was flying last year, which is also adjusting right now. On an adjusted month-over-month basis compared to the last 3 years, the transaction volume is now as though we were back in the pandemic level lows. Again, I don't know what this is going to lead to in the market, but in this interest-raising environment, it is something to be horrified of and to take real caution if you're getting involved in real estate. But let's dive down into these 2 real estate hacks that your mortgage brokers, your banks, and your realtors will not tell you about, one for buyers and one for sellers. On the buyer side, you do not want to be that person right now that has the bank knocking on your door because you took a variable rate mortgage you can no longer afford in this interest raising environment. And as the dominoes fall, you have to declare bankruptcy. How do we avoid this? Well, as a new buyer in real estate, avoid the bank altogether. What do I mean by that? It involves a little more legwork, but find somebody that's willing to privately mortgage you their property. It might require a higher down payment, somebody that's likely heading into a retirement phase that wants extra cash flow. You offer them, say, maybe 50% down on their property, and then to mortgage the other 50% at whatever the going interest rate is. Maybe it's 5%, or you can even negotiate a better deal. And that person heading into retirement might prefer to get that cash flow that they can spend off their old real estate. And that way, if you default on the property, they either get the real estate back or you sell it and pay off the rest of the debt. And that way you can't declare bankruptcy and there will be no bank knocking on your door. The second hack here has to do with your down payment. If you are somebody that is looking to sell a piece of real estate, do not, and I repeat, do not trust your realtor on holding the deposit. Most people are completely unaware when a buyer comes in to buy your real estate, they put a deposit down and you have closing coming up in 3 months and they decide not to close on that deal unless they are willing to sign a release form giving you that deposit, or for some reason they drop dead. Guess what? You now have to hire a lawyer and go fight them in court, which can take a long time and actually cost you sometimes more than the deposit's even worth. My personal lawyer told me he was fighting to get $250,000 back for a client, and he was already $50,000 in lawyer fees in several months into getting to court to actually fight it. And in the meantime, guess what? That realtor you trusted so much, that's actually sitting in their bank account collecting juicy interest all the way. You think that money's just sitting obliviously not collecting anything for someone else? Trust me, your realtors are not here to help you. How do we avoid this? Get a damn lawyer. When you're buying, selling real estate, you need somebody in your corner that's not somebody looking to make a commission. You need somebody that you can trust that's there to fight for you, and the only way is to do it with a lawyer and get that money in a clause in your own damn account, your lawyer's account, that if they decide not to close on that deal, hey, guess what? That money auto goes to you no matter what. This is by far the biggest problem I've seen in real estate, and it's something that I have had to personally deal with, and it's something that I will never trust a realtor on again. And realtors are just here to make money, guys. Do not trust them, other than if you can find a good realtor to help you find a really great location for a property, great. But always have a lawyer looking over the deal. And again, make sure you have entitlement to that damn deposit, because if you're using Remax, baby, I would not trust them if that buyer does not close on that property, because say goodbye to that down payment. So make sure you know who's buying that property, where they live, and where they're coming up with that capital, man. Proof of funds matters more than somebody's word. Keep that in mind, folks. Now let's dive down into the 3 real estate investment trusts that I find very intriguing as a Canadian. This is my favorite way to own real estate because there's no mortgages, there's no banks involved, and you start cash flowing the second you start investing in these companies. Now, if you enjoy this real estate conversation, you want to have an extended, more in-depth conversation, go over to my Patreon account. It's literally less than a cup of Starbucks a month, and I offer 10x the value, stuff I will never talk about on this YouTube channel, and it would help supporting this channel as well. But let's get into this with numero uno, and one that I find relatively intriguing, which is Slate Grocery REIT. This is the smallest cap of the bunch we're going to be looking at, worth $744 million, has been proving quite recession proof during this volatile market and yields over 7%. Damn it. Every $10,000 you put in this, you'll start making $700 annually, and that'll be distributed monthly straight to your account, baby. But let's talk about the debt structure before we talk about what this REIT does. Their total assets sit at $1.7 billion against a total liability of $1.1 billion, meaning they have about $600 million in underlying assets. So it's trading a little above its underlying asset value. REITs are disconnected from the real estate prices themselves, so sometimes you can pick them up on discount, but sometimes you'll overpay above their NAV price, which is their net asset value. But as titled in the name, Slate Grocery REIT has a diversified of triple net lease structured grocery stores all across the US. And let's be real, grocery stores are probably the most stable tenants you're going to have. They're recession proof. Yeah, they're brick and mortar and people are going there every damn day. Walmart, all these kind of companies are encored by some of these REITs. So I really like this one. It's very intriguing, though they do have higher debt. Just check to see how long that debt goes out before renewal, because if the interest rates are still really high, you're going to start seeing their cash flows get eaten into, which can put their dividend at risk depending on their payout ratios. But Granite Real Estate Investment Trust, numero dos, has been an absolute growth beast here, focused in the logistics center with almost a $5 billion market cap, 4.12% starting dividend. Not as high as Slate Grocery, but this one has dividend growth and a lot of stability behind it. Firstly, the debt. This company sits on $8.5 billion in assets against $3.2 billion in liabilities, meaning it's got an underlying asset value of over $5 billion, but it currently trades for right around $5 billion. So you're probably buying this just below its net asset value. And again, this is a company that is globally diversified in the logistics center. What does that mean? Well, if you're a company like Amazon that needs to use warehousing for shipment purposes, or you're a company like Magna that needs to store and ship parts, you're going to go to a company like Granite Real Estate. And this company actually has those giants as their current clients. They have properties all across Europe, the US, Canada. Again, great dividend growth. It's a very foundational stock, and I would be buying this for a great starting yield and growth to look forward to in the future. Leading us into the third REIT that I still absolutely adore, and that is my Riocan, the Rio clan. This is a mall encored REIT in Canada that I believe owns the most valuable real estate that Toronto has to offer, and is diversifying right now into building massive construction properties into the condo and residential market worth $6.74 billion with a 4.54% starting dividend yield. Firstly, the debt sitting on $15.1 billion assets, $7.2 billion liabilities. Minusing that out, they got about $7 or $8 billion in assets, which currently right now they're trading well below that NAV price. And honestly, I believe anytime Riocan dips below the $20 a share price is a great buying opportunity, as we were really buying this heavily in the March 2020 crash when people thought malls were dead. But the fact of the matter is this real estate investment trust, their malls are encored by companies like Walmart, by like the banks, really recession-proof businesses like LCBO, telecom giants. And the fact is there is no new malls being built in Toronto. They have a monopoly on this market, and they are diversifying this portfolio. After coming out of the 2020 March period crash, they decided to cut their dividend and they really stabilized their cash flow, meaning I think this is probably one of the best Canadian REITs you can buy. But the problem with it is it hasn't grown since basically 2008 when we went through that crash period. So I would be looking at this one specifically for cash flow today. Granite Real Estate Investment Trust for long-term stabilized dividend increases and stock performance growth. And then I would buy Slate Grocery to continue diversifying and getting a much higher yielding REIT that might come with a little bit more risk being a smaller cap, but is a little more secured being encored by grocery stores. So at this point, this is a very general overview, and I'd love to know what you think about this conversation down below and where you think the real estate market is going through 2023. And any other tips or hacks you have, I want to hear about those as well.